Insurance isn't one size fits all. That's why drivers have enjoyed Progressive's Name Your Price tool for years now. With the Name Your Price tool, you tell them what you want to pay, and they'll show you options that fit your budget. So whether you're picking out your first policy or just looking for something that works better for you and your family, they make it easy to see your options. Visit Progressive.com. Find a rate that works for you with the Name Your Price tool. Progressive Casualty Insurance Company and Affiliates. Price and coverage match limited by state law.
This episode is brought to you by Indeed. Stop waiting around for the perfect candidate. Instead, use Indeed sponsored jobs to find the right people with the right skills fast. It's a simple way to make sure your listing is the first candidates see. According to Indeed data, sponsored jobs have 4 times more applicants than non-sponsored jobs. So go build your dream team today with Indeed. Get a $75 sponsored job credit at Indeed.com/podcast. Terms and conditions apply.
30 seconds to
What do you
air.
think about flowers for the show notes page?
These are for the guests.
Hey, I'm gonna need some more books for these mics.
Anyone have the promo for the show notes?
Wait, where's the Fiji water? Is this tap water?
15 seconds.
Somebody get the cat.
I can't drink tap
Grab
water.
the cat.
Can someone tell Joe's mom to stop vacuuming?
It's not hard to find.
Has anybody
This
seen
Fiji.
my hair gel?
Artesian water. Natural.
Quiet on the set. Live in 3, 2.
Live from Joe's mom's basement, it's the Stacking Benjamin Show. I'm Joe's mom's neighbor, Doug, and it must be the apocalypse because one type of investment is gaining traction in investment communities. And that isn't great news. On today's show, we'll share which investment you should be wary of and how to navigate these investing waters. Plus, in our TikTok Minute, we'll shine the spotlight on one bank with a can-do attitude. And of course, we'll answer a question from one stacker who thought, I'd better call Saul. See hi and OG. And don't you fret, as Joe's mom says, because right in the middle of all this madness, I'll share some delightful trivia. And now, 2 guys who bring delight to thousands of stackers every Monday, Wednesday, and Friday. Oh my God, who wrote this? It's Joe and OG. Why do you make me say those things?
It is so fun. We're gonna have fun listening to Doug say that.
Let's
hey,
make
everybody.
him say delightful twice and then say how great we are. He loves it.
It is delightful hearing you say delightful. You know what? It's delightful because we're halfway through the week and I get to spend time with the 2 of you. It's going to be fantastic. We're going to today make you a better investor because we're talking about some bad stuff to be wary of in the investment community, but a guy you never need to be wary of. That's like the worst segue ever. Mr. OG's here. How are you, man?
I'm very waryless.
Very unweariable.
Yes. Very unwearable.
So I have spent my entire morning today trying to figure out, and I finally came up with it, what type of pants a mystic wears.
This is going to be some awfully terrible.
This is what's
dad
occupied
joke.
all your time. You've been trying to figure it out all
morning long. It's all I've been thinking about, and I finally figured it out.
Worthy thing to spend your time on.
What kind of pants does a mystic wear, Joe?
I'm going to tell you in just a minute exactly what type of pants they wear. But before that, OG, when it comes to investing, the thing I think that drives me crazy the most is this, hey, I need the hot investment. I got to have the hot thing. I got to have what's the hottest investment? Like, how often have you been at something and somebody asks you what you do and immediately like, so what do you think about NVIDIA? Or what do you think about Microsoft? Or like they think that you're Joe Stock Jock.
I'm really quite happy to announce that doesn't happen very much anymore, but it certainly was a thing over long periods of time. I think the biggest thing that I see people making mistakes on is forgetting history, forgetting how different cycles of investing work and how it's worked in the past, and different sectors of the economy are not always going to be the biggest producing. For everybody who's like, I'm going to buy it once and keep it forever, but all I invested in is tech stocks. just go back to 2000 to 2012 and let me know how you feel about that little roller coaster ride of the NASDAQ for 12 or 13 years. I think there's a lot of people out there who would somewhere in their panic out. And for those who say they wouldn't, I don't know. NASDAQ was down almost 80% at one point in time during that little roller coaster ride and didn't get back to even from 2000 to all the way back to 2012 or 2013. So it's 2024 right now. So you're telling me you're good with breaking even on your investing from now till 2037? You're going to just hang out till 2037. Hand to God, you're not going to touch it. And you're going to be okay with a minus 80 somewhere in there. And you're going to stay the course for 13 years. I don't know. I like diversification better.
History doesn't repeat itself, but it sure does rhyme. We're going to talk about people.
That's a great line. You should copyright that or something.
TM. I just made that up.
Never
on
heard
the spot.
that before.
You know why? Because I'm a psychic. And do you know what type of pants psychic wears?
What kind?
Just a pair of normal pants. It's exactly the type. No? Okay, you don't like that? How about this? Dell PCs with Intel Inside are built for the moments you plan and the ones you don't. They're for those all-night study sessions, the moment you're working from a cafe and realize every outlet's taken, the times you're deep in your flow and can't be interrupted by an auto update. That's why Dell builds tech that adapts to you. Built with long-lasting batteries so you're not scrambling for an outlet, and built-in intelligence that makes updates around your schedule, not in the middle of it. Find technology built for the way you work at Dell.com/Dell PCs. Built for you. In business, there is no room for guesswork. Every shipment matters. Every deadline counts. And when you're trying to keep operations running smoothly, the last thing you need is uncertainty. That's why reliability is at the core of USPS Ground Advantage. From the moment your package is first scanned in, it moves through a secure nationwide network, aiding in a timely and accurate delivery. You get near real-time tracking so you can keep up with your shipments. And with affordable upfront pricing, there are no hidden fees or surprise surcharges to throw off your cost sheets. It all adds up to predictable deliveries you can depend on, because knowing your logistics are handled lets you focus on everything else, your customers, your team, and the future you're building. Visit USPS.com/Ground Advantage to start shipping with confidence. USPS Ground Advantage. We mean business. Well, there was some better messaging, I suppose. Just a pair of normal
work on your
pants.
jokes.
No? Too soon?
Of course it was too soon. We're supposed to be known for our great dad jokes, and that's the garbage you're bringing today?
That's not a good one? Just a pair of normal pants? No? Okay. Well,
no, you've done so much better.
Big headline. Let's get into it, guys.
Hello, darlings. And now it's time for your favorite part of the show, our Stacking Benjamin's headlines.
Our headline today comes to us from Investment News. Investment News is an industry rag, as they call it, read by people that are in the investment community. By the way, Doug, I don't know if you know this, but there is a dude who is one of the most amazing people in the investment community who was in the September 9th issue of Investment News. Guess who that would be?
Neighbor Doug. Did they feature me again and they didn't even call me this time?
They did not. They did not feature this person either. We totally missed it until just...
Which is okay.
Was it the curmudgeon himself?
It was OG in Investment News. How about that? Making waves.
They had a couple pages they needed to fill.
So you said it accurately when you said industry rag.
This headline is OG is awesome. No, that's the other one. This one is written by Bruce Kelly. Sales of, I'm going to save it, climbing in 2024. OG, you fill in this blank. Let me read, and I'm going to leave the words out. Although sales of blanks are having another down year, blanks sold by financial advisors are climbing as clients look to diversity and yields in portfolios.
REITs.
Well, actually, sales of non-traded REITs, it says, are down alternative investments in general through the roof. Through August, financial advisors had sold $76.6 billion of illiquid alternative investments, including non-traded REITs, non-traded business development companies, interval funds, and a variety of private placements, according to Robert A. Stranger and Company. That matches total sales for the entire year of 2023. Seems to me that as we see investors looking at, oh, maybe an economic slowdown, OG, maybe I need to start getting fancy.
I just want to know what the hell are people doing? Like, I'm looking for yield. Your flipping savings account gets 5% up until like, a couple of weeks ago. It was 5 guaranteed percent by the bank. And if you didn't have a high yield account getting 5, shame on you. You had a freaking year and a half to get it, And so, okay. So what else oh, well, the stock market, the stock market's up like 14% for the year or something stupid, or 20%, or like it's up 50% in the last 2 years. Like, what the hell else do you want, people?
Do people just get bored? Is the deal, OG, that investors just go, okay, I got these index funds. I look at them every day and, oh my goodness, index funds are so boring. You know what would spice it up?
Losing a ton of money.
If I bought a non-traded business development company.
That would really spice it up.
Let's do that. That'd be super fun. What the hell's an interval fund? I've been doing this for a long time. I have no idea what an interval fund is.
I think it's a fund where the money goes from your pocket to their pocket in the interval between you losing money. I have no idea. I've never heard that either. It sounds made up. The idea that having private equity, private placements, alternative investments, this is a long game of people thinking that they have to invest like bajillionaires. Oh, well, the Harvard endowment has 26% of their portfolio in timberland. Why can't I? Well, because they have an endowment that's $100 billion. And if they need some liquidity, they can sell their S&P fund. They have income coming from their portfolio in the billions of dollars a year in terms of cash flow. You don't have that. You don't have that at $5 million. You barely have it at 10. You know what I mean? Like, this is stuff that I get you can buy into small businesses, or you can, Shark Tank, right? You look at the show Shark Tank, and who are the investors in Shark Tank? Billionaire investors who are like, yeah, I'll give you $1 million for this. Yeah, I'll give you 500,000 for this idea.
They say very flippantly, by the way, oh, $1 million, I'll give you the 2.
Well, yeah, as an owner in the business, sure, that's what they're doing. They're buying equity, but they're still evaluating it. And obviously there's a lot of stuff behind the scenes that you don't get to see. They're not making a business decision in, 11 minutes on Shark Tank. But I've
heard those Shark Tank episodes, by the way, in real life. Like, each person's out there with them for a long time.
Yeah.
And they're working through it, and then they chop it up and use the best X number of minutes, 17 minutes or whatever it might be.
Sure. But my point is like, that's not John Q. Public, who just retired from AT&T with $1 million in his 401k going, what should I invest in? You don't need to do that. Why would you want to? Who's going to be smarter than the collective wisdom of the entire market? That's just what I don't understand. People are like, I think that I should own this other weird little esoteric thing. It's like, why do you have to? Why do you think that you have to hit a home run? Why do you think you have to swing for the fences on every pitch? That's like going to the casino, like with your retirement money, going, man, I really hope I hit it, because if I don't, I'm not going to have enough to retire. If you're at that spot, you just need to work a little bit longer, or you have to go get another job or change your lifestyle. There's a lot of different options there, but I just don't understand. And this is true with these products. Nobody buys these. All of these things are sold. Just like annuities, they have a place. Whole life insurance, or permanent life insurance more specifically, has a place. But generally speaking, people do not go out and go, what I need is an annuity with a huge commission, attached to it.
Well, these business development companies must have huge commissions as well.
Of course they do. That's the only incentive it is to sell the damn thing, is that you got to get paid to do it, because it's a piece of garbage. It's like, if you took, and Joe, you talked about this, I don't know, years ago, you went to a retirement seminar with a bunch of really smart people. And one of the questions was, if we change the compensation structure of annuities to being more like index funds, or more like investment-based asset management fees, like the rest of the universe gets paid, we see that annuity sales crater. I wonder why that is. Why is that? because you don't need to have that product most of the time. And 95% of the cases, you don't need to have it. It proof that you don't need it. The whole purpose of an annuity, not to pick on annuities, but the whole purpose is to guarantee lifetime income, right? The whole idea is to take your pile of money, give to the insurance company. They say, we're going to pay you a check every single month for the rest of your life. What percent of annuities are annuitized? What percent of annuities are actually used for the freaking reason that they exist in the first place? It's not a big number. I don't know it, but it's not a big number. Have you known any person, Joe, in your life that has annuitized an annuity?
No, not once.
And I bet you know hundreds of people that purchased annuities.
Tons and tons and tons of people.
Thousands, at least anecdotally.
Met so many.
I know of one annuitization, one ever in 26 years of doing this professionally. It's like, well, why does this product exist if not to do the thing that it's supposed to do? And then nobody does the thing that it's supposed to do. What does that tell you about the product?
Being used inappropriately.
It's a piece of crap. So
these business development companies, let's talk about these products, because these business development companies, Bruce writes, have supplanted REITs as the favored illiquid alternative investment sold by financial advisors. So the commission must be bigger.
All
than
those
REIT.
words in a row to indicate to you that it has no place in anyone's financial plan.
Oh, wait.
Illiquid alternative sold.
Oh, it gets better, because Bruce Kelly explains what a business development company is.
Let's hear what it is.
And the Shark Tank analogy, I think, is appropriate when it comes to these.
Could be. Yeah, a little bit.
And it's the sexiness of this, I think, that sells people, OG, because just think about, you could have these brand new, exciting companies bringing new drugs or new innovation or, automation. Just say the words AI, right? Mm-hmm. And all of a sudden it's great and you're on the inside. But this next sentence Bruce Kelly writes gives me such a headache. BDCs, business development companies, work like banks and raise capital from investors to lend to small and mid-sized private companies. Okay, that part doesn't give me a headache. It's the next sentence that does. So you are going to be one of these investors. You go in, and the management of this business development company then loans this out to small and mid-sized private companies. It's actually the next two sentences make my head hurt. The close-end companies, ouch, invest primarily in debt and equity of private firms. Yields can be attractive because the BDC's exposure to high credit risks amplified by leverage. Let me explain what the hell's going on there. So you are either loaning money to small or medium-sized private companies,
okay,
which means they're illiquid. It's going to be hard as hell to get your money out. There has to be an event that allows you to get your money out. So
if you're lending it, you have a contract, right? You're saying, I will lend you $100,000. You're going to pay me some interest and pay me my principal back over a period of time.
And the reason the yield can be attractive is because it's a high risk credit scenario that you're in. Meaning, if I'm loaning money to a company that is shaky, I can demand a damn high return on that money, because no bank wants to give this company money, or very few banks want to. And the ones that do are very comfortable with the fact that this is a very risky endeavor. But on top of that, OG, not only are they loaning money to these high risk companies, it's amplified by leverage.
The sexiest tool of them all.
So we then take this bet, and somehow they're turning around, they're leveraging that, which means when the leverage then falls apart, the leverage domino falls apart, this whole thing is a house of cards.
Yeah. I mean, here's the thing. If you have a credit card and you have a line of credit on your house and you have a mortgage, you totally understand how all of this works, right? Your mortgage is at 5% or 4 or 2. It's secured by your house. It's gone through a detailed amount of underwriting. They looked at all of your net worth. They looked at your bank accounts. They looked at your pay stubs. They verified your income. They got your tax returns directly from the IRS. They don't even mess with taking copies of yours anymore. They just we'll just get it right from the source, buddy. Right. So they did all this underwriting and said, we have evaluated this. Plus we know that the house is worth this. We're lending against that, very boom, 5% interest. Then you go to the bank a couple of years later and say, hey, my house has gone up in value. I would like to have a line of credit on my house. And they go, oh, wait a second. Now we have a second position on this house, right? If this goes belly up, the first guy's getting paid for sure. Maybe the second guy doesn't, right? The second bank doesn't. So the interest rate's a little higher. Maybe the costs are a little bit less. Maybe the underwriting restrictions are maybe just, they just go, we think you're good for it, right? And so your line of credit tied to your house, but also tied to you, is maybe 9%. And then you have a Chase Sapphire card where you just went online and put in your social security number and you said, I make $500,000 a year. And Chase was like, sweet, here's a $50,000 credit line. And it's at 30% interest. This is the difference between the different underwriting and the different scales of responsibility. And when you lend money to companies, which is what you're doing largely with the BDC and frankly with a REIT and some other things as well, you're buying that unsecured debt. You're buying that, that credit card at 30%. Because to your point, Joe, there are very shaky companies, or potentially, right, very shaky companies. They have very little ability to go get debt, because at the end of the day, if you're going to borrow money, you, an individual, like, think of it this way: would you rather borrow it at 30% or 5%?
Right. You want the lowest interest rate you can possibly get it.
And if you go to the bank and they go, we're not giving you 5%, are you crazy? 5%.
If these companies could go someplace else, they would.
Absolutely.
In a heartbeat, they go someplace else.
Absolutely, they would. Because why do they want? You know how hard it is to have an ROI of a 30% loan? Look at how long it takes you to pay off your freaking credit card bill when you have, the average person has $10,000 in credit card debt. It's going to take them 20 years to pay it off. 10 grand, because the interest is so much. It's so hard to do that. Or the alternative is they give away equity. They go, we don't even actually know what's going to happen with our company. Here, you guys own 25% of it, which is, to your point about liquidity. It's like, great, you own 25% of this company, la-di-da. What does that mean? It doesn't mean anything until they freaking sell or dissolve or have, get purchased by another company and your shares get bought out. So, and then you add leverage to that, which is,
makes my head hurt so bad. And the person buying this stuff is just being talked into it by somebody. It's going to be like you're Mark Cuban on Shark Tank. Yeah. Just imagine.
I hate that we're using that analogy because I don't want somebody to steal it and be like, that's a good one. Here's another thing for what it's worth. If you want to be involved in brand new startup companies, if you wanted to be a new investor in non-public companies, but companies that are like, when you think like, oh, wouldn't it have been great to like own some of PayPal before PayPal was, or own some of, those types of companies. For years and years and years, there was no way to do that. You had to be an angel investor, right? Or a VC investor. You had to, have billions of dollars and you doled it out through your hedge fund or whatever the case may be.
Somehow you're on the inside.
Yeah. Nowadays, there's different tools that you can actually go and buy shares of the companies that you already know exist that you want to be a part of directly. It already exists. For example, there's a company called EquityZen. You log in, you create an account, you say what kind of investor you are. You have to be a certain kind, but you can go in and say, I wear a Whoop, right? One of those bracelets that, track your heart rate and exercise and all that sort of stuff. I want to be an investor in Whoop. And they will call you, they will email you and say, hey, by the way, we're going to have a capital raise for, you could be an investor in this company. Now, if you want to do that with part of your investing, that's the format to do it in, and I'm sure there's a commission and all that other sort of stuff for these companies. But my point is, if you want to be an investor in some leading, potentially cutting edge companies or potentially, pre-IPO, whatever, don't go out and lend it to some ambiguous middleman who's going to make decisions, who's going to pass the decision to the next person. And you're like fifth in line. Go right to the source and say, I want to get into Shopify before Shopify goes public, right? And that doesn't mean you're going to get access to it, but you can go to these websites and put your name in the hat. So, not saying that you need that.
I was going to say it's still a horrible idea for most people.
It's awful. But that to me is a much better way of going directly to the new, startup economy or whatever it is that you want to,
instead of one of these garbage package products.
Well, you don't have any transparency, right? How do you know what you're,
you're just handing them money and going, hey, go invest in some companies for me.
Yeah. Yeah. Which, by the way, these other EquityZen and these other, IPO, pre-IPO company, they'd have those packages too, right? Like you can say, give me the 10 best or 10 biggest or whatever, you give them some money, but still, what you're owning, right? It's on your balance sheet. It's not this line item of nonsense.
We mentioned REITs earlier, and I don't want to scare people that have REITs. A lot of real estate
Let's
investment.
Scare the hell out of them.
Publicly traded REITs, putting some money into real estate, not a bad thing, OG,
Publicly
necessarily.
Traded.
Publicly traded. But people hear REIT. I'm like, OG is going off on REITs. There's a difference between publicly traded REITs and what they're talking about in this investment news piece. This investment news piece is talking about non-traded REITs. Generally, these are REITs that are pre-IPO. They're what I used to refer to as baby REITs. They are getting the seed money to begin building the REIT out that can go public later. So again, your money's tied up, huge commissions to get these things started to the people that begin the REIT. And you really don't own any real estate. If you're in really early, you don't own any real estate. You own a hunk of cash while the manager's out there trying to purchase.
Well, and the biggest thing with non-traded REITs is this. You have to know, how are they paying their dividend? The attraction for non-traded REITs is the dividend payout. We're going to give you 8%. We're going to give you 7%, whatever the number is. And it looks really, really, really sexy. Pull out the form, pull out the income statement, and you want to look at funds from operations. How much money do they make from the operation of the REIT versus how much do they pay in dividends? Almost all of them, especially very early on, lose money on operations, but somehow manage to pay an 8% dividend.
It is.
I'll let you kind of simmer on how that might happen.
Bernie Madoff.
It's a Ponzi scheme.
Oh, your word's not mine. But
it's 100%. They are paying you
with someone else's cash.
Doug gets in after you do. They're sending you Doug's money so that you stay happy.
I knew it.
That's where they get you, Doug.
That's where they get you. That's where they get you. Just look at they have to disclose it. Funds from operations, FFO, and you'll see. And most of these, they're negative. And you go, well, wait a second. So you're losing money on the operation of the thing that you're doing is buying and selling real estate, and you're losing your ass doing it.
Yeah, but they make it up on volume.
How in the hell am I getting $8,000 on my $100,000 every year as dividends? There was one major change about, I don't know, maybe 8 years, maybe not 10, but 8 years ago, 8 years ago that the SEC did, which I totally appreciate. These real estate investment trusts, these BDCs have to value their shares at least once a year now. Remember 25 years ago, they
crushed so many of them.
They would put them at $10 a share and tell you the whole time it was $10 a share. And you're like, well, the economy is down 40%. How is the real estate still $10 a share? They're like, I just trust as it is. Yes. Magic. This is how we do it. $10 a share. It's been the Great Recession. The economy's the S&P is down 53%. How's my REIT doing?
Don't worry, we have a harp.
It's $10 a share. You're like, wow, I bought it at $10 a share 5 years ago. Isn't the market down? No. It's $10 a share. But anyways, the SEC made them start valuing these, so there's at least some transparency into the actual value
how you're doing
on an annual basis. But look, stay away from stuff that's not liquid. Just stay away from it. There's no sense in adding it to your portfolio. There's no diversification benefit. If you want to have something illiquid, go start your own freaking business. Do that. You will have a better result.
Open a restaurant.
You will have the same illiquidity as you do.
Go open a restaurant where you can have a front row seat to losing your ass. At least it isn't somebody else having all the fun losing your money. You can lose your own money.
But you're going to try if it's your own cash, right? You're going to be like, hey, man, I got to make this work. Kids got to go to college. So just keep it in liquid stuff. Diversify. Boring wins. Come on.
Yeah, I think you nailed it. The point here, stackers, is that you don't need to reinvent the wheel. It doesn't need to be fancy. Index funds, such an easy, straightforward path to wealth, and it is completely 100% transparent. You can get in and out whenever you want to. Not saying that you should, but you have the ability to get in and out, and those fees much, much, much lower, which means could be more money than in your pocket. We will dive even more into these. Maybe Kevin Bailey will explain to you. Here's an incentive. Kevin Bailey's going to explain what an interval fund is. We're going to delegate it to Kevin. Hey, Kevin, what's an interval fund?
Figure out, but Kevin's our person with the harp. He's the magician.
And more proof that you don't need the new thing. OG and I have been doing this forever. I mean, we've been doing this we have no idea what the hell an interval fund is, which means it's the new thing. This is the new hot deal. We have no idea what it is. StackingBenjamins.com/201. Kevin Bailey's going to tell you what it is. He's going to tell us what it is. I can't wait to read tomorrow's 201. Find out what an interval fund is. It's going to be great. It's always free, twice a week. It is also the way that you find out when OG and I, and sometimes Doug, going around the country. I just was in Cleveland, headed to Las Vegas and to New York City in the next couple months. So going to be fun. All right, lots more coming up on today's Stacking Benjamin show. We've got the TikTok Minute. We got a call from a stacker who said, I better call Saul, C-High, and OG. But before all that, of course, we got the goodness known as Doug's trivia question.
Yeah, I can't wait to do this one today, Joe, because your mind is going to be blown. You will gasp. Your jaw will hit the table when you hear how many things happened on today's date.
Really?
It's unbelievable. And when I get to the end of it, you're going to be like, Doug, just stop lying. Just stop making things up. I'm predicting it right now. Hey there, stackers. I'm Joe's mom's neighbor, Doug. And on this date, way back in 1992 in Peekskill, New York, shout out to all my Peekskill peeps, yo. I got Peekskill peeps. You don't even know. A small meteorite crushed a 1980 Chevy Malibu, proving again that even the universe has issues with American car manufacturers. Imagine how awesome that footage would have been if YouTube was a thing back in 1980. Peekskill would totally be on the tourist map, like more than it already is. And how YouTubeable would this have been? On this date back in 1885, the Washington Monument opened, proving that the best way to show your unbelievable affection for this nation is to erect a rock-hard tower of love straight up in the air.
Wow.
And as a climax...
But wait, there's more.
Oh, I went there. As a climax, what if YouTube showed the Hoover Dam, which began generating power on today's date in 1936, with water spewing all over the place?
No.
Whew. Anybody need a cigarette? Well, sadly, YouTube wasn't created until much later. But how about if we make that today's question? What company announced on today's date? See, they just keep coming. What company announced on today's date in 2006 that they were going to pay $1.65 billion to purchase this never-ending supply chain of rock-hard monuments, flowing rivers over dams, and meteorites bashing into cars? I'll be back with the answer right after I get the camera out for the second half of this episode. OG's definitely going to do something stupid in the next 20 minutes, and I want to be rich and famous because of it.
This episode is brought to you by Progressive Insurance. Do you ever think about switching insurance companies to see if you could save some cash? Progressive makes it easy. Just drop in some details about yourself and see if you're eligible to save money when you bundle your home and auto policies. The process only takes minutes, and it could mean hundreds more in your pocket. Visit Progressive.com after this episode to see if you could save. Progressive Casualty Insurance Company and Affiliates. Potential savings will vary. Not available in all states.
What would you do if your online store converted 36% more shoppers? You could take 36% more vacation.
Another pina colada?
Yes, please. Open a new retail location with 36% more square feet.
Fantastic.
Hire 36% more help.
You're hired and you're hired.
Shopify has the world's best converting checkout, up to 36% better than other e-commerce platforms. What you do with those extra sales is up to you. Switch to Shopify today at shopify.com/listen and get a $1 trial. Shopify.com/listen.
Did you know Fast Growing Trees is America's largest and most trusted online nursery with thousands of trees and plants and over 2 million happy customers? Whether you're planting fruit trees, adding privacy, brightening things up with flowers, or bringing in houseplants, Fast Growing Trees has it all. Even better, they can help you find options that are right for your climate, your space, and lifestyle. Click Order Grow. Every plant arrives healthy with the Alive and Thrive guarantee straight to your door. So if you're ready to get planting, this is the moment. Right now, they have great deals on spring planting essentials, up to half off on select plants. And listeners to our show get 20% off their first purchase when using the code WWO at checkout. That's an additional 20% off. Better plants and better growing at fastgrowingtrees.com using the code WWO at checkout. Fastgrowingtrees.com, code WWO. Now's the perfect time to plant. Let's grow together. Use WWO to save today. Offer is valid for a limited time. Terms and conditions apply. Go to growingfasttrees.com for details.
Hey there, stackers. I'm YouTube content magnet and the guy most likely to ruin your wedding video, Joe's mom's neighbor, Doug. I gotta say, I'm over here binging videos of OG laying down knowledge bombs on the SB YouTube channel. Seriously, I just watched CNBC's Josh Brown from Monday share tips and Ramit Sethi. Who knew you could learn from YouTube? Wow, time for me to change my viewing habits to include more of this goodness. But speaking of goodness, what company back in 2006 on today's date said they were going to pay $1.65 billion to purchase YouTube? It was none other than that company formerly known as Google. And now, time for a segment that saves you having to Google the headline you need to know about right now. Let's get back to Joe and OG.
Man, that's a lot on today's date, Doug.
So many things happened on today's date. Things were erected.
Big day.
Things
Big
flowed.
day, if you know what I mean. Huge day, getting bigger all the time.
I didn't get it the first 17 times, Joe. Let's have some more euphemisms.
Hey, time for the
On
TikTok
today's
minute.
date in 2024, a very famous podcast was canceled.
That's right. And when you want to get rid of the ridiculous segment, you just go into the TikTok minute, which is, not ridiculous at all.
Definitely
this
not
is
ridiculous.
Where a TikTok creator shines a light on either some great things. Well, we shine a light on the TikTok creator who's either doing something brilliant or air quotes brilliant. Doug, which one we got going on here? We got brilliant or air quotes brilliant?
Can I have air quote brilliant? Like just one half of the air quote? I think it's going to be a little ridiculous, but there might be buried in there might be something good.
Well, this one, and I got to say, I didn't say it last week, but big thanks to Stacker John, who sent in last week's and this week's. If you remember, he sent in a comedian last week, Greg Warren, that was very funny, talking about interest on interest, the miracle of compounding interest. Instead, Greg is compounding bad mistakes. This time, he has another comedian who is talking about the greatest bank of all time. And it's a bank that you may not think is the greatest bank, but my opinion of this bank based on this Facebook reel may have actually changed. Let's listen in.
We all know what the best bank is, folks. Say it with me. Wells Fargo! The greatest bank of all time. They are. Everyone should bank with Wells Fargo. This is true. This is a financial hack for you poor mother. Little hack. Wells Fargo is the greatest bank of all time, and this is why. Wells Fargo refuses to stop breaking the law. Every 3 to 5 months, Wells Fargo commits a massive felony, and then I receive a class action lawsuit payment. Every 3 months, I get an email from Wells Fargo like, oopsie. We sent all your money to Boko Haram.
Wow.
Here's $125. We're sorry. That won't happen again. And then 3 months later, they email me like, oh no, it happened again. We used your Roth IRA to fund the invasion of Ukraine. You're technically a war criminal. Don't worry, we'll waive those overdraft fees. Wells Fargo rips, dude. Every 8 months, they'll email me and they'll be like, someone is hacking your account and is making fraudulent purchases. And that person's name is Wells Fargo.
Big thanks to John for sending that in. Wells Fargo OG has a can-do attitude. I think it's great. They have a can-do attitude.
They do. Yep.
Yeah.
We can do anything that we want.
Who says we can't fabricate accounts out of thin air? Watch this. Hold my beer.
Yes, we can. Yeah. Can you see them in the meeting? Oh, no, this would be funny, Jim. This would be funny. Hold on, Margaret. Let's stick with that and see where this goes. Yeah, so you make up an account, and then I make up an account. We'll make another account. Oh, this will be great. This will be fantastic. I don't have, by the way, the name of that comedian, but Stacker John sent that in. So thank you very much. Time to now pivot to maybe a little bit more serious topic. Time to pivot to help somebody who said, Better Call Saul. See Hi and OG. This is the part of the show where we help out a stacker indeed. And today, the stacker who asked for help is our friend Michael. Hey, Michael.
Hey, Joe and OG. This is Michael in Illinois. About a year and a half ago, I moved halfway across the country for a new job opportunity. I had been to this location about once to interview for the job. Fast forward to today, and I'm kind of realizing that the area is not a good fit for me. I like the job quite a bit, and I like the field. So I started to look for jobs back home. One problem with that is, though, that those jobs are pay less than my current position or about the same. So I wouldn't be able to really secure a raise easily at my level of experience in my field. But I figured you guys might have some good advice for me on some things I could do to help with that, or maybe a pay cut isn't something I should consider at all. I mean, I'm 24 and I've managed to save up a significant nest egg already.
Scoreboard.
Doing some back of the envelope calculations. I'm what most people would call quote unquote coast fire if I wanted to be. So maybe you guys can just give me some thoughts.
No, you're not.
Wow. Thanks for calling, Michael. We're going to give you a little love.
24 and fire. Give me a break.
Coast. He's just coasting.
If he saved a lot in high school.
In the 18 months that he's been working.
We talked about this the other day about the woman who's 25 years old. She's already saved $100,000 and she can stop saving if she chooses to. We had a different opinion, but I guess that makes sense though. At age 24, it's not a fit, OG. What do you think?
Well, I mean, I have two thoughts on this. First of all, you're 24, so you can do whatever the heck you want to do, right? Like if you've saved so much money, Mr. Coast Fire, then
wow,
then you can take a pay cut, right? Jeez. Like you can go live your life and do your thing.
People are really going to want to call into us.
The Dave Ramsey show? I think this is the Dave Ramsey show.
Back down, Susie Orman. Let's.
Well, sometimes people need to be put in their place, like you haven't quite made your life accomplishments yet at 24. No offense to Michael. There's still some runway. And this comes from a position of love. This comes from a position of
here it comes now. He puts velvet on the hammer, Doug, after we shave him into it.
Yeah, it's a 10-pound sledge, but there's velvet on it.
I just don't want you to, the thing is like when you have a presumably high, he didn't tell us what job he has, but let's say he's got nice income, nice differential between his living expenses and his income. So he's saving a bunch of money, which is awesome. Take advantage of that flexibility today to earn and have the opportunity for flexibility in the future. What I think people miss out on early in their working career, especially when they drink this like Coast Fire Kool-Aid that is full of sugar. It's like, oh, I don't have to do this. It's like, you don't know what the future is going to hold. You don't know if you're going to have one kid or 7. You don't know if you're going to live in Iowa, Illinois, or California. You don't know if your mom and dad are going to get sick and you're going to have to go help them for a period of time, or if you're going to get sick and not be able to work for an extended period. You know what I mean? There's so much stuff that can go on in your life that's unpredictable. Why would you want to limit your options and say, well, I've reached this pinnacle of success that I forecast 40 years into the future. I don't have to save any more money between 24 and 64. I'll be fine. It's like, well, unless something happens. It's like, well, why would you have the flexibility today to give yourself a huge buffer when you're 40 or a huge buffer when you're 35 and you totally hate your job and you're like, I want to quit for 3 months or 6 months or 5 years so I can go raise my kids or do, like, who knows what the future is going to hold. So don't let off the gas right now is kind of what I'm thinking. It's like, I get it. You can do the math and say, if I don't touch my money for the next 50 years, I'll be rich. It's like, okay, cool. I'm going to tell you, you're going to touch your money. I have more examples of people saying they wouldn't than would,
Yeah, but I'm going to I'm still going to take the other side of this, OG.
Which is fine.
Because if he's 24 and he already thinks where he's at, the condition he's in is a dead end. And I'll get back to this in a second. But if it truly, truly is a dead end, get the hell out.
That's my point.
Especially if you've done a good job of saving. What I like about what you're saying is even if you take a pay cut today, I think you need to know what the advantage is and how you're going to make that back.
No, 100%. I agree with that. That's what I'm saying. Like if you have, I'm not saying stay in the job because you got extra cash flow. I'm saying
sure sounded like that was what you were saying. No, man, stay on the gas. Too bad your job sucks.
He said it's the same job. It's just, they're same pay, just different lifestyle. My point is, don't let that go. Don't use that as an excuse of like, I've got $80,000 in my brokerage account because I double that every 7 years at 10%. I swear to God, I'll never touch it. I promise. And by the time I'm 65, I'll have 4 million. It's like, well, but 4 million in 40 years from now is not as much as 4 million is today, by the way. You know what I mean? Like there's a lot of other things there. But if you have the flexibility today, because you have such a margin of safety already, then you can do whatever the hell you want to do. If you want to move back across country and take a job that has the same pay or lower, you can do that. Don't forget the fact that there is some unpredictable stuff that's going to happen in your life. And rarely is it just a straight line of up and to the right and nothing ever goes wrong and nothing ever changes. And there's never an emergency in your life. And there's never, the best stories when we talk to clients who are like in their late 30s right now, my favorite conversations are when they go, okay, I've been saving, I've been investing, I've been doing the thing, and I hate what I'm doing. Can I take the summer off and just think about it? It's like, yeah, you have $2 million and you're 49 or 39. You've earned the opportunity to take a break. If your lips are just above water when you're, like their whole life, because you like literally calculated it to the penny, and you're like, I'm going to get 10.01% in my S&P fund, and you get 9.99, and you're just underwater, you don't have that flexibility. Why let off the gas right now? Let off the gas when you're 28 or 36 or 41, or you know what I mean? So just be cognizant of that. I don't think that you should stick in a job that you hate. I don't care if you'd be 58 years old and not have enough money. I wouldn't stick in a job that you hate. Life's too short to deal with that sort of nonsense. But I think you're doing yourself a disservice to be like puffing your chest out at 24 going, oh, I'm coast fire, I'm good. Like, no, you're not. You don't know what the future is going to hold. Give yourself some additional margin of safety there. That being said, for the existing job, if you like it so much, find out if you can do it remotely. Find out if the company has a division in another division in another area of the country or something like that. This is a great time to explore these different things. And I don't blame you. I'd get the hell out of Illinois.
It's not like it's Ohio.
Oh my goodness. Oh God. The number of states
we're just whittling them down
that are seeding from the Stacky Benjamins universe. He was fine until he started banging on Illinois. I don't want to speak to Michael with this next point because he said that he likes his job. It's more the community that isn't a fit. I think a lot of times, because I see this on social media all the time. Well, you know what? Your life is too short to have to work in this horrible job or this whatever. There are some of the top jobs you truly have to swim a moat to get to the good stuff. There is a paying your dues. There's learning how the job works. There is a there's a price to be paid. Yeah. Like the number of times that when I was with American Express, where I would see brand new people in our division that would have serious coping. You saw it too, OG, with building their new career. And the funny thing is once you actually did that, the job got a hell of a lot easier. It got more fun. All of a sudden you're working with people that have interesting problems and you're helping them meet them, and you go home and you feel good about yourself, But at the beginning, it's not that, because you had to build your business. Watching people cope with that and unable to realize that some of the best positions out there, there's a moat you got to swim to get to the goodness. I think that keeps a lot of people away. Certainly, Michael, that's not for you. You like your job, but man, online, I see that all the time.
But, sometimes it's with the community too, right? It's like it takes a while to figure out what neighborhood you resonate with, or, like, where are your people? You like to play golf and the golf course is on the other side of town and you haven't really found those people yet, or you want to go to the bar and watch the game, and maybe don't give up on it if maybe that's the issue, or maybe it's just like, yeah, dude, this isn't for me. And that's totally fine too. I think at any point in time, it's okay to pull the ripcord. I really do. We did it. I mean, in the span of 6 weeks, we went from, maybe we ought to look at moving, to, yes, we're going to move, to we sold our house in one day and packed our stuff 3 weeks later. Like, it was boom, boom, boom. We were in Texas. And when we got here, when I walked into the apartment that we rented, the sense of failure that I felt by moving from a giant colonial house with all the room in the world and all my stuff to, I have this really teeny tiny 3-bedroom apartment that really was like a 2-bedroom apartment, but they put a wall to make it 3, and I couldn't have any of my stuff. It was all in storage. We barely had enough money to like pull all this stuff together to do the move. And I'm like, what the heck did we just do? We just like nuked our entire life. Ah, crap. And oh, by the way, I have no idea who that neighbor is across the hall. I have no idea who that neighbor is across the road. We lived in this apartment complex. My wife
support network
30 miles away. Didn't know. I knew you. That was it.
2.5 hours away.
2.5 hours away. It was nice. You came for breakfast every so often, but that was it. I mean, it takes a while to kind of get your sea legs.
Yeah. And the other thing I would suggest, especially at 24, I would say you'll learn pretty soon, everything costs. right? Everything great that you have in your life has some cost to it. Oftentimes, most times, it's not a dollar symbol. If you've got a job you like, I think you said you liked it. I think you said you liked the company. Sometimes you're just going to, those are very hard to find, by the way. Most people you talk to will not be able to say they like the job they're doing and the company they're doing it for.
Oh, yeah.
So those two things are rare. Maybe the cost for that right now at this point in your life is not being in the coolest city in the world. Maybe you're in the middle of nowhere, maybe you're in DeKalb, Illinois or something like that. And it's just not where you really love to be at 24.
We love you, DeKalb. Send your hate mail to Doug at...
I don't even know if that's actually in Illinois. But anyway, that's a cost. And it's actually a very small cost to the long-term investment that you're making in your career. Doesn't mean that you have to keep paying that cost for the next 20 years, but maybe for the next 2, 3, 4 years while you get this great experience at a company that you like working for. That's a small price to pay so that then you can go get the cool job in the cool city. But if you start moving all the time, that lasts not very long in your early career before people are like, why is this guy moving jobs every 18 months, every 9 months? Yeah. And then it's pretty tough to get the cool job in the cool town. So think of all of the costs of your decision-making process.
I like that from 7 Habits. When you pick up the stick, you pick up the other end. You got to think about what all the other ends of the stick are.
Sometimes there's poop on the other end of the stick.
What's coming along with the stick? We're with the analogies today. We got it. Somebody please save me. Thanks, Michael, for that question. Apologize for OG's saltiness there. I think you're doing a great job of saving, Michael. Good work. Nice job. StackyBenjamins.com/voicemail. If you would like to call in and have OG crush you as well.
No. So good.
Coming up on Friday, another great roundtable. Jesse Kramer joins OG and Paula. We're going to have a bunch of fun. By the way, if you want to watch us make that Friday sausage, that's on our YouTube channel usually on Wednesday afternoons, about 3 p.m. Central Time. So 4 p.m. East Coast. What's that? 1 p.m. Pacific. Just come join us on Wednesdays over on the Stacking Benjamins YouTube channel. If you subscribe, it will then notify you when we're going live. If you're here, not because you're wondering about just the job, you've the bigger question of how does all of my stuff really work together and what's my financial plan? Well, OG and his team are taking clients. So head to StackyBenjamins.com/OG. I want to spend just a second here, Doug, on the back porch, because we got a nice review of this show. Good intro to money. This comes from Matt HJJ. This is a good intro to money, how it works, how to generate, how to hold on to it. I like the entertainment value, which keeps it interesting. And then obviously, Matt also says at the end, I don't like the ads. And of course, no way for us to continue podcasting as long as we have without having the advertisers that make it free for everybody. So Matt, it's the nature of the beast. But thank you so much for the 5-star review. And by the way, remember when I used to give books? I don't want people to send me a 5-star review because I've got books, but I got way too many books here again. Authors that are coming on the show are Monday mentors. They send us copies of the book so I can prepare. And after I prepare, I don't have room for all this stuff. So if you send me your review, joe@stackybenjamins.com, I would love to, as long as I got books, send you out some of that.
Remember that thing we just talked about? Everything costs. You want a book?
Dance
monkey. Give us a 5-star review.
I don't want to trade books or reviews. I really don't.
But you want a free podcast that you're entertained by and it's a great place to learn about money? You're going to listen to an ad, right?
Oh, good
Everything
point.
Costs.
Yes. Yeah.
Everything costs.
Yeah. We're also very thankful that they can keep us on the air for as long as we've been. Coming up on 1,600 episodes of the Stacking Benjamin Show. Can you believe that? 1,600. My goodness.
Reminds me of my new address. 1600 Pennsylvania Avenue,
Coming
baby.
soon.
Coming soon. Hiring the moving truck.
Wait a minute, Doug. I thought we weren't going to fact check this. That's going to be your new address. What, too soon with that comment? I don't know. Doug, get us out of here, man. What should we have learned today?
Well, Joe, here's what's on our to-do list based on what we learned today. First, take some advice from our headline. Alternate investments? Buyer beware. There's no need to get fancy with your allocation, no matter how much money you have. Feeling bored? Go get a hobby, man, and leave your allocation alone. Second, just
You'll go blind.
You'll go blind with that allocation.
Stop touching it.
Easy.
Get your hand out of your allocation.
Enough. Just poop on the end of that stick, Doug. Keep going.
Second, moving for a job? Ask your employer to maybe pitch in on moving fees or consider the difference in cost of living and find money hidden where you didn't think you had any. Or just stick with this awesome job and stick it out for a little. Never mind. But the big lesson? YouTube is huge. Did you know that I can buy a ring light at Target? It's time for all Doug, all the time, people. Coming soon, Doug 24/7 channel. It's Doug sleeping. It's Doug eating. It's Doug at play. Oh my God, the possibilities. This show is the property of SB Podcasts, LLC, copyright 2024, and is created by Joe Saul-Sehy. Joe gets help from a few of our neighborhood friends. You'll find out about our awesome team at stackingbenjamins.com, along with the show notes and how you can find us on YouTube and all the usual social media spots. Come say hello. Oh yeah, and before I go, not only should you not take advice from these nerds, don't take advice from people you don't know. This show is for entertainment purposes only. Before making any financial decisions, speak with a real financial advisor. I'm Joe's mom's neighbor Doug, and we'll see you next time back here at the Stacking Benjamins Show.
Guys, I saw this TikTok video, and I think knowing the terminology helps you make money. Obviously, there was the term we didn't know today, but being able to pronounce things right, like insurance, being able to say that correctly makes sense. But what happens?
Adirondack.
What happens? Whatever, some mountain. What happens when you get the term wrong? Let's listen in.
It's a word you pronounced incorrectly one time and it still haunts you to this day.
Man's laughter. Man's laughter. 15 to 20 for laughing.
15 to 20 for laughing.
I don't think OG has it yet.
Oh, I got it right away.
Man's laughter.